Hey, good morning, guys. Doing a quick video on the impulsive moves and corrective moves and trading checklists. And then I'm going to hit the on demand button and we'll take a look at this actual trade from back in November, APVO. But let's go ahead and get started. We'll go over trading requirements. The most important thing with trading requirements is that they meet most of the criterias. In this checklist. So one of them is the top gainers list. This stock actually hit the top gainers list in the after hours, $11.70. And so it was on the top gainers list. So that's the first thing that we're checking for. And then the next thing is we needed to have a 50% retracement. We needed to pull back and find an area to buy. And so that's what you see here is that it's pulled back and right now it's down to about $8, $9. And so the other thing is volume. Now I have this set up on my Thinkorswim program. The average volume for the day is 245%. We would like to see that three or four times. The 3 month average. So right now we're at 245%. So it's up there. And then what we want to do is we want to pay attention to the non-EMA, which is my T line. We want the candlesticks to be closing above the T line, 3 to 4 candlesticks to be closing above the T line. We would like the non-EMA to be crossing over to 21, and then for both of them to be crossing over to 50. In this situation, since they're below, so we're waiting for it to come back up and reverse. And so that's what we're looking for. News, we want the news to be life changing. That's good for the consumer, a new product. They signed a big contract, with the government or some type of sales, and then recognizable patterns, which we'll go through and we'll take a look at as we actually record it. So the definition of an impulsive move is large candles, which you can see right here. This is your impulsive move, right? It's either up or down, right? We know this, right? The market, there's three things it's going to do, right? It's going to go up, it's going to go down, it's going to go sideways. And so this is an impulsive move. We want the candles to be large, one color, all red, small wicks on the bottom, right? And small wicks on the low side when it comes to red candlesticks. So what happens is so it makes this impulsive move and then it starts going sideways, which is a corrective move. Okay. So accumulating, corrective move, whatever you want to call it, it's when it starts going sideways, and it doesn't have to necessarily go straight sideways. It could go on a slide up uh, uh, trend. So just, doesn't have to be exactly sideways, right? So but you have small candles, they're mixed colors, so they go from red to green, red to green, red to green. And so the bulls are, saying, hey, we're going to buy. The bears are buying, but it's staying inside this channel, and it's eventually got to make another corrective move, impulsive move, which in this situation, it actually moves down again, right? And so right now, this stock's on a downtrend because it's showing that it's in this channel. If you drew a channel, it's showing that it's on its way down, right? So that would be part of like a corrective move. It's on a channel. Um, you can put it where it's actually touching almost. So now we're just waiting for something to happen, and it's down. It's back down into a corrective move again, right? And so we're just waiting to see, for it to move up or move down. So we're going to go ahead and get play, and we'll play this thing out. And I'm actually going to buy some shares with the simulator, and we'll wait for the first move. I'm going to put it on 1 minute because I like to trade on the 1 minute. And so right now, right, what it's saying to us is that, hey, I'm still on a downtrend. I'm in the corrective move. So now we have a green candlestick. Let me zoom out here. pull this down, get our rules where we can see them. All right. And so we have one candlestick, right? But we like to see 3 or 4 close. And so one of them just closed. It's a pretty bullish candle, right? We might buy a little small starter. Okay. So we get in, but we're also going to watch it too, because we might need to get out, right? And so right now we're at 914. We'll go say to, I don't know, 904 would be our stop loss, give it 10 cents. All right. So it's going up. So there's our second candle. They're starting to close above, get a little pushback. I'm actually going to buy, right? The bulls are what pushed it up. Okay. So I'm in at 5,000 shares, right? If we take a look at this, right, could this be a potential impulsive move here? Meaning what? Large candles, right? And so that's basically what we're waiting to see. Is it impulsive? Is there some type of pattern, right? We already looked at it and it broke. 3 candles broke above the 9 EMA. They're closing now above the 21 EMA. We might see a little pullback. It'd be a time to buy, right? It pulled back, pushed up. These bottom tail candlesticks mean that the bulls pushed it back up, which if you see a lot of bottom tails, like right in this area, there's a potential that this stock's gonna go up. And it actually is forming. You can come here and draw out a line. It's starting to form a pennant, a bull pennant. Something's going to happen right here. We'll extend this over. And so it'll go up and retest it. And we just needed to break this area right here around 918. And so the neat thing about it is you have this is a doji candle with where the bulls pushed it back up. The candlesticks are getting a little bit smaller. It's going to squeeze right up in here. So I'm going to buy a little bit more, thinking that it's going to break up. Right now, that's kind of what it's saying. It's on an uptrend. I do a little squeeze. So what you like to see there is something like this, right? And so at that point, you're up, right? $1,600, $1,100. It's met all the requirements. It looks like it's going to continue to go up. And so it's now breaking above the 50. So if they got the 9 over the, let me get rid of some of these so we can see it better. So this would be a bull pennant, a bull flag. Starts going up, an ascending flag. So yeah, it's going up. The channel's starting to form. You can continue this one on, right? Small channel. So we'll see if it continues in between there. So you would sell if it broke this right around this 918. That would be your stop loss. You could actually come over here and put it. That way you at least made some money. But we want to try to maximize our profits. And so, we're looking, okay, it has a little pullback. This could be a pennant, some type of flag right up in here. It come back, it's testing the 9 EMA. And so, but if it goes, down, breaks the 21 EMA, we'll get out, which would be right around the 918. So we'll see what happens right here. Is it going to do the same pattern that you see here? Is it going to do right here? And so most likely, because it's higher highs, higher lows, higher highs, higher lows, which means that's a definition of an uptrend. So let's see if it holds true. You got your support right here at 918. Okay, so you could actually draw, this triangle, this rectangle right here. So we'll see. We'll see how high it goes. Move this up a little bit or out the way. So it might have a little pullback again and then go up again. So if you haven't gotten all in, right, looks like that 50 is going to be an area of support. You can draw a support line. So higher high, higher lows, higher high, higher lows. And if it's another higher high and higher low, that means it should continue up. So you got some recognizable patterns, which would be right up in here, also right here. You got a nice a bull candlestick. So higher high, higher low. Waiting to see if it continues up. So at this point, if this was a trade that I was in, I'd probably sell it right now, since I'm up $3,000. That's a reversal candlestick right there. That's a harami candlestick, or a hammer. You can see my Thinkorswim's. I wrote this script. I got this script that tells you it's a reversal candle. So right up in here is when you would want to sell. So we would move this up, right? The potential sale, because we want this candle. The next candlestick needs to be green. We don't want it to be red. So it did sell. So $2,800. We'll let this play out a little bit, see if that was the right thing to do, and better be safe. And sorry. Well, it kept going up. So, but you take your profits. You live to trade another day. Definitely creating higher highs and higher lows. This is the candlestick to sell right there. You can see how far it gapped up over that nine EMA. This is going to be the area to sell. It's going to reverse. I'm going to go forward and see what happens. Nope. Yep. So that was the area right there. Just because this candlestick closed so high. And so it'll start the process all over. I might do another video of it reversing, because what it's doing right here is it's an impulsive move, right? And is it a 50% retracement? So if you go here, let's just put this at the area of support, 933, and it goes up to say 986, and then it comes back down. Is this a potential 50% retracement? Is it going to start the process all over? So hope you guys enjoyed that. I appreciate your time. Y'all have a good day.